Hi, I'm Hannah from the e-Residency team, and in this tutorial, let's talk about cross-border taxes for e-residents. In this video, we can only provide general guidance. Where you and your company pay taxes will depend on your individual situation and a number of specific factors. Do not rely on this video as legal advice, and please always seek help from tax experts. When talking about cross-border taxes, it's important to zoom out and look at the context where we're operating, so both the system and the reality of doing business. We are operating in an incredibly complex and challenging international tax system that is a pragmatic compromise between countries, their national tax rules, regional tax agreements, and also tax treaties between countries, which are all based on out-of-date tax structures, old assumptions that people and transactions and businesses are location dependent, and of course principles of residence and source. But the reality of business and people today is much more location independent. Because of transport mobility, new technologies and globalization, companies often are operating across borders. They might have a workforce in one country, manufacturing in another, and their headquarters in another. So this tension between the system that's based on old tax principles and the current reality of doing business leads to a lot of uncertainty and huge costs of compliance, particularly for small and medium-sized businesses, such as those that you as an e-resident might start here in Estonia. As an entrepreneur, be really clear on the fact that you and your company are two distinct legal entities, and you will therefore have different tax obligations and responsibilities under the law. So as an individual, make sure you are aware of where your tax residency is and therefore where you will be paying personal income tax, withholding taxes, and making social contributions. And for your company, also be aware of where your company has tax residency, whether it has any double taxation risks and how to alleviate that, where it pays corporate income tax, if it needs to register for payroll if you have employees under your company and in which countries it might need to do that, and finally, whether it needs to register for VAT. In this tutorial, we're not going to cover all taxes. We're just going to look at the four main types of taxes that you'll come across as an e-resident company owner in Estonia. And these are personal income tax, social taxes, VAT, and corporate income tax. So let's start with personal income taxes. So these are salaries, wages, fees that you might receive as a board member or director of a company, rental or interest income, many other things. These are just some of the more prominent ones. Generally speaking, you will declare personal income tax in your main country of tax residence. Generally speaking, this is the country where you spend the most time. You'll need to consult the tax rules, rates, and filing procedures in the country where you're tax resident to pay personal income tax. And if you have employees, you'll also need to consider where their tax residencies are. So for example, if you have employees for your Estonian company in Estonia, the personal income tax rate is 22%. This is rising to 24% from next year. The second type of taxes to be aware of as an e-resident company owner are what we call social taxes. Now, these are taxes that a company contributes for its employees. They're also known as labour taxes, pensions, superannuations, and social contributions. Generally speaking, you will declare these taxes where your employees are located or registered. And employees may need to be registered in the country where they are tax resident. Your Estonian company will have different obligations depending on where its employees reside. For example, if you have staff in Estonia, you'll be paying 33% social taxes of their gross salary, plus some unemployment contributions, and you and the employee will share those contributions. Now that we've covered personal income tax and social taxes, you may be wondering how you can pay yourself or your employees. So the first and main way is through a salary. So if you have staff, you'll pay them an employee salary, or if you are the sole worker in your company, you can also pay yourself a salary. There won't be any tax obligations in Estonia if the work is performed in another country. Instead, personal income tax and social income tax should be declared in the country of tax residence of the employee. The second way to pay yourself is as the board member or director of your company. So any work that you do managing your company, you can pay yourself a small salary. This will be subject to personal income tax at the rate of 22% in Estonia, and this rate is going up to 24% in 2026. You'll also need to pay social tax in Estonia unless you are from the European Union or a country that has signed a treaty with Estonia covering you in social security terms, so exempting you from paying social taxes in Estonia. And the third way to pay yourself is as a shareholder. So you can distribute a dividend to yourself from your company, and the company will actually be paying the tax on that dividend. The rate currently is 22%. And you might also need to be aware whether you need to declare this dividend in the country where you are tax resident, and they may take some withholding tax. Value-added taxes, or VAT, is another category of taxes that you'll need to know about as an e-resident. Also known as consumption tax, sales taxes, goods and services taxes in other countries. In the European Union, VAT is applied to nearly all goods and services bought and sold for use and consumption in the EU. Each European Union country sets its own VAT rates and rules. And VAT is generally due in the country where the good is finally consumed or the service is carried out, with some exceptions. Estonia's VAT rate is 22%, which is increasing to 24% from the 1st of July this year. Companies must register for VAT when their turnover reaches 40,000 euros. This 40,000 euros relates to supplies in Estonia only. And there is also a new European Union threshold for small to medium-sized enterprises of 100,000 euros. So once their transactions in total across the EU reach that amount, they'll need to register for VAT in one of the European Union countries. But they also need to be aware of the different thresholds in those different countries as well. The European Union also has two schemes known as the One-Stop Shop and the Import One-Stop Shop, which aim to simplify VAT procedures. And essentially what they mean is that online sellers can register and declare VAT in one country for the whole of the EU. This is subject to price thresholds though. Corporate taxes are on a company's income. So for example, its profits, rental income or interest. Generally speaking, corporate taxes are declared where the company is tax resident or has a permanent establishment, and I'll cover these very soon. Make sure to consult the tax rules, rates and procedures in the taxing country because they will be very different from state to state. For example, Estonia has a very different system than most other countries when it comes to corporate taxation, and I'll cover this very soon. One of the most popular questions we get here at the e-Residency team is, where do I pay my company's taxes? Now, this sounds like a simple question, but the answer can be quite complicated, and that's because of a few principles that you need to know in order to work it out. The first is that your Estonian company will be automatically registered as a tax resident by the Estonian Tax and Customs Board when the company is registered. The second is that if you are running your company from another country and doing most of the activities from that country, the tax board there might say that you need to be paying corporate taxes there, and that's because of this concept of permanent establishment. The third thing you need to know here is that e-Residency is not tax residency, and it won't exempt your company from its foreign tax liabilities. But don't worry too much because Estonia has signed many double tax treaties with other countries. So if you're paying corporate taxes in another country, dividends may be exempted in full from taxes here in Estonia. So don't worry too much, you shouldn't be double taxed, but please talk to a local tax consultant for professional advice regarding your specific situation. Now, I mentioned before that Estonia has a bit of a different system of corporate taxation from other countries. What do I mean by this? So in Estonia, there is no annual corporate income tax. This means that if you reinvest profits into your company, you will not be paying tax on that reinvested profits. And this is great for small businesses and startups in their early stages because it enables them to grow capital and be more secure financially. Instead, the corporate tax is applied to distributed profits. So if the company pays a dividend to shareholders, the company will pay 22% tax on that dividend. This tax will also apply to business expenses, for example. Estonia's tax code is still incredibly competitive. In fact, for the last 11 years running, Estonia has been ranked number 1 in the Tax Foundation's annual Tax Competitiveness Index, which ranks tax codes across the OECD. And I think the reason for this is that it has minimum tax regulation and relatively low tax rates. They can be declared and paid online easily and in way less time than competitor countries. And also, the Estonian Tax and Customs Board is incredibly friendly and helpful and will reply to any questions you have within a few days. As I've spoken about the benefits of the Estonian tax system, you might be wondering how you can actually legally make sure that your company can pay taxes in Estonia. And this is where you'll need to build up your business substance here. So ways that you can do this is, for example, to rent an office in Estonia, to hire employees here, come here a few times a year and make your big strategic decisions and hold board meetings, or even register assets, physical or intellectual property. Another way, which we love to see our e-residents do, is to actually relocate and come and spend some time in Estonia and build up your business substance that way. And a final way that I'll mention, which can be quite advantageous for e-residents running your Estonian company and paying taxes here in Estonia, is if you become a digital nomad. We've covered a lot in this tutorial, so I wanted to give you a recap of the 4 main taxes that I've discussed. The first is personal income tax. Make sure to declare this where you or your employees are tax resident. The second is corporate income tax. Declare corporate income tax where the company is registered and/or has a permanent establishment. The third is social taxes, which will be declared where your employees are located or registered. And the fourth are value-added taxes. And thanks to the one-stop shop and import one-stop shop themes that the European Union introduced a few years ago, online sellers can declare their VAT in the EU country where they are registered, subject to price thresholds. If you're keen to learn more and read more about taxes, we have plenty of content on our blog, knowledge base, and website, and I'll put links in the YouTube description below. You can also reach out to a tax consultant, and on the e-Residency marketplace, we have dozens of very, very good accountants and lawyers and tax experts who can help you optimize your tax strategy for your business. Thank you for watching this tutorial. If you haven't already, watch our other tutorials on starting a company, business banking, and becoming an e-resident. Thank you for your time, and be sure to visit our website to read more about e-Residency.